Well, hello and welcome to this Moneycontrol live stream. It's a brand new day and a brand new episode of Morning Trade with me, Nandita Khemka. Well, it's a crucial day given the fact that the RBI governor will be announcing the policy decision at 10 a.m. And of course, we are heading towards that record high when it comes to the markets and lots of stocks in focus as well. And we'll also have your stock-related queries answered by your technical expert on the show. So if you have any queries, send them in to us on our live feed and we'll have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends mixed as the market fluctuates near 10-month highs. Profit taking in anticipation of another rate hike by the Fed leads the Nasdaq lower by about 1% or thereabouts. However, Dow manages to close with minor gains. Reports suggest China has asked banking majors to cut deposit rates to boost the economy, while Japan's first quarter GDP tops expectations as robust spending continues. Asian markets, however, trade largely lower, while the SGX Nifty is hinting at a flat start. But, the crucial level to watch out for will be 18,800 on the Nifty. All eyes will be on RBI as it will announce its policy decision later today. Consensus estimates point to a status quo policy. All eyes will be on whether or not the stance will shift to neutral. Well, markets are inching towards record and FMCG index is at an all-time high. What's leading to this exuberance? We discuss that and also talk about all the stocks in focus, including Tech Mahindra. Well, as I was talking about the RBI policy decision that will be announced at 10 a.m., let's get on board then, Latha Venkatesh, to put into perspective what to expect this time around. Latha, last time there was a surprise when it comes to interest rate, decision. It was a pause. This time around, can the governor surprise with the stance?
This time data is going to be what we'll all watch out for. There is a wide expectation that inflation forecast will be brought down because the first quarter is way below what the RBI had forecast. So they have to, if you do the sheer arithmetic, they have to bring it down. And they may raise the GDP forecast because Q4 was so damn good that you could factor that in. If that combo comes, then your 18,887 is a given. I mean, if that combo comes. Now, two overnight news becomes important. One, MSP price hikes of 5 to 10% and a CNBC TV18 news break that fuel prices could be cut by 2 to 5%. Now, how does this factor into the inflation forecast? What economists tell us is this is lower than the normal pre-election MSP hike. Pre-election year MSP hikes are usually, even go up to 15-30%. This is softer than that, but it is higher than all the last 4-year hikes. But the bigger factor is that market prices are higher for rice because of the fears of El Nino. So they say that they had factored higher cereal prices, especially rice, and therefore they're not changing their forecast, in which case RBI also is likely to give that expected lower than expected forecast. Likewise, fuel price cut. Everyone expected, only they expected it around Diwali and the state government elections, Madhya Pradesh, Rajasthan elections. It may come a couple of months earlier. So really factored in that expectation of they have a 5.2 forecast that they could bring it down to 5 or lower is there. If it is lower than 5, then I am assured that the markets are going to be very happy. On the stance, yes, withdrawal of accommodation is what they call it. And to explain it further, the governor said, this is a pause, not a pivot. Pivot means I'm going back to cuts. I'm moving down. He clearly said that. Now, if both these phrases are repeated, then I think it will be a little bit of a setback for the bond markets. And he is likely to repeat it because El Nino fears are there. Fed may do one more hike in July or something. So he may just cut-paste those phrases. In which case, the bond markets may sell off a bit. But I think for the equity markets, these two numbers, GDP, if it is higher than 6.5, and CPI, if it's lower than 5.2, I think they're much to rejoice.
Well, we will have to wait and watch. We'll, of course, be coming to you live at 11 a.m. when you will be at the RBI headquarters to get your take on the policy once it is announced. Well, with that, Latha, thanks a lot for joining in and taking us through the expectations. Well, on that note, let's bring on board our technical expert for today. Milan Vaishnav of Gemstone Equity Research is joining in. Good morning, Milan. Yesterday, we saw a very smart uptick come in the second half of the session. We conquered 18,700 after being in a very tight range of 18,650 or thereabouts. But today, if there is a very bullish undertone to RBI governor's, address, what is the level one should be watching out for? Do you think we can clock that 18,800 mark in today's session?
Yes, hi Nandita, good morning. So far as the markets are concerned, and if we take a look at it from a purely technical standpoint, I see that there are multiple things that can happen at the same time. Number one is that we might continue to inch higher. There are no doubts about it. The basic undercurrent remains quite buoyant. But the more focus, I believe, should be not on conquering 18,887 and moving higher, but keeping the head above 18,600, 650 zone, because that is the original resistance from where the breakout is supposed to take place. Because last time when it tried in December to break above 18,660, 18,604, we did not actually get a breakout, and what we got was just an incremental high of 18,887. So yes, testing those levels is very much possible, but at the same time, I also expect the consolidation to. I mean, there are fair chances of some consolidation happening, because there are again two things I'm watching at which are not so comfortable. One is the market internals, that is the market breadth. I believe that the market breadth is yet not so strong as it should have been for such strong breakouts to occur and sustain themselves. And the second thing that I keep an eye on is the very low level of VIX that we are right now sitting at. So it might happen that we may continue to inch higher, but at the same time, we will have to stay highly vigilant at these levels. So far to say. So yes, 18,887 is likely sooner or later, but how strong the breakout will be, that is something we need to sit and watch.
Right, we need to watch out for even the market breadth as we proceed. Let's talk about the stock of the day, Tech Mahindra. In fact, LIC has increased stake by 2% to somewhere around 8.8% or thereabouts. And the average buy price was somewhere around 1,050 rupees or thereabouts. But if you look at the stock over the last few days, it has come under a fair bit of pressure and was consistently emerging as a top loser on the Nifty. But ever since it's reported its numbers, it has seen a rebound of sorts. So what would you advise investors to do with Tech Mahindra right now?
I'll just take a view with a little longer term perspective. For almost last several quarters, the Tech Mahindra has been trending in a very sideways trajectory between 960 and 1150 levels. So I believe that so long as it is below 1150 level, it will continue to stay in a range. Any move above 1150 will give some impetus to the stock. So far as this level is not taken out, expect the stock to stay broadly in a range.
Right, expect the stock to stay in a range. Some queries coming in on the banking stocks. Yogesh Kumar has written in, wants to know your thoughts on Canara Bank. Over the last 1 month or so, the stock has been pretty flat but has traded with a positive bias, and on a 5-day basis as well, up somewhere around 2% or thereabouts. Given the fact that it is approaching 52-week highs, should one accumulate this counter on dips now?
Yes, one can basically from a technical charts point of view, it is creating a bullish ascending triangle kind of a situation. Not so a classical one, but yes, the situation looks good. So so long as Canara Bank keeps its head above 300 levels, one can accumulate the stock at these levels, and any move above 330 will take it higher.
Right. And what about Axis Bank? There's a query coming in from Vasudevan. He wants to know your thoughts on this. I think yesterday it came under a fair bit of pressure. I think it was because of, caution ahead of the RBI monetary policy. But, among the large cap banks like ICICI, Kotak and Axis, which one would you advise investors to look at now?
Let us take on Axis Bank first. Axis Bank has attempted a breakout by moving past 960 levels. And right now it remains moderately overbought. And if you look at ICICI Bank, ICICI Bank has obviously, it has also formed a double top kind of resistance at 950 levels, and it has been consolidating right now. So from technical standpoint, I see more strength in Axis Bank. So for investors, I mean, if they wish to stay invested in both the banks, they should divide their money 60-40 in the favor of Axis Bank. But if you are made to choose between Axis and ICICI, the relative strength of Axis remains far better than ICICI.
Well, Axis remains far better than ICICI. With that, hold your thought, Milan, where we'll come back to you and discuss more stocks and get more queries answered by you. But let me also bring on board Kaustubh Pawaskar of Sharekhan to discuss the kind of rally that we've seen on the FMCG index. Good morning, Pawaskar. In fact, very good to have you on the show. The Nifty FMCG index has hit a fresh record yesterday. Stocks like Tata Consumer, HUL, Nestle doing extremely well, given the fact that some of them have reported a great set of earnings, even though HUL hasn't really come up to the mark given its lower volume growth. But what is it that's leading to this exuberance right now, given the fact that there are concerns over El Nino as well that could slam the brakes on some signs of rural recovery that we are witnessing? What is it that's leading to this exuberance now?
Yeah, good morning, Nandita, and good morning to all the viewers. You correctly said that in Q4 there was some sign of improvement in the rural, demand, where we have seen that rural volume growth, came back to a positive trajectory, which was not the case for past 2 to 3 quarters. But we should not, get overexcited by this, because we believe that still there is a lot of recovery we need to see into the rural market. This can be considered because of the low base as well, what we have seen in the last quarter. You have correctly said that monsoon will play a major role going ahead, but there are some factors like better Rabi crop, and now next year is the election year. So prior to election year, we normally see government providing some incentives to the rural economy, so that could lead to a better demand in the rural markets ahead. And the commentary what we have been hearing from most of the management is quite positive in terms of rural demand, and they are expecting the momentum to improve. Key important factor over here is that now inflation has moderated, and because of the moderation in the inflation, both in the raw material and the overall inflation, we might not see any significant price increase from current level. In fact, in certain categories like soaps, detergents, or certain HPC category, we have seen companies have already passed on the benefits to the consumer in terms of price decline. And I think this price moderation or grammage increase, this kind of activity should continue, and they should help FMCG companies to see gradual recovery in terms of volumes. On the other hand, we have seen urban demand quite remaining resilient, and that help FMCG companies to post moderated volume growth in low single digit, but because of the urban demand remaining resilient, the volume growth was there for the FMCG companies. So what we believe in FY 2024, the pricing growth should moderate, volume growth should gradually improve, and that would result in decent high to low single digit kind of a revenue growth for FMCG companies. And in terms of margins, we believe that because raw material prices have reduced, we have seen Q4 margins improving. So I think that should also continue in the quarters ahead.
Right. Kaustubh, let's talk about the two biggies, HUL and ITC. ITC firing on all cylinders, cigarette business, paperboard business, hotel business, FMCG business, all the businesses firing on all cylinders. But, if you look at HUL, of course, because of the disappointing volume growth, Street was a tad bit disappointed. But do you think one should now look at ITC vis-a-vis HUL, or should one play on HUL, given the fact that, some may argue that all the good news around ITC may already be in the price? What is your own sense?
See, I would prefer ITC because the valuations currently are still at a discount if we compare it to HUL or some of the large FMCG stocks. And we have seen that ITC's valuation have consistently improved. There are two key reasons for it, I believe. One is the non-cigarette FMCG business, the way it has scaled up in the last 5 years. Its margins, which were in mid-single digit, it has now gone up to around 10%, and we believe that EBITDA margins will consistently improve. And if it inches closer to mid-teens kind of a margins. I think those are the margins some of the large FMCG companies are currently getting in the range of 50 to 20%. So that is one factor that ICICI's non-cigarette FMCG business have consistently done well. If we compare it to some of the large FMCG companies during in the last 3 to 4 quarters, consistent double-digit growth, margins have improved. So that is a highlighting factor. The second important point is the hotel business. I believe that hotel industry is expected to do well for next 2 years, considering the strong room demand, scenario which has been expected over the next 2 years, and supply is expected to grow by just 3 to 4%. So that will help hotel business of ITC to do well. And the MD in this one of the recent interviews have indicated that they might look into uh, uh,
Right.
uh, hyping of the business and
Right.
generate value for the shareholders. But that is something which we need to wait and watch. But overall, fundamentally, from the business prospects, non-cigarette FMCG business is doing exceptionally well. Hotel business is doing good, expected to maintain that momentum. And cigarette business also, we have seen that in terms of volume growth, also
Right.
in terms of the profitability have done well. So we believe that
Right.
all guns are fighting for ITC, and it should continue to do well. HUL, I think rural will play a major role, because I think once there is a recovery in the rural market, we should expect the volume growth momentum to improve for
Right.
HUL. But the good factor is it is continuously getting
Right.
market share.
Right. Well, ITC is the preferred bet right now, but of course, rural will play a very important role when it comes to HUL. With that, Kaustubh, thanks a lot for taking out time and joining in this morning. Let's go back to Milan then and take up some more queries that are trickling in this morning. This one is coming in from Ujjivan, and he wants to know your thoughts on Gujarat fluorochemicals for the long term. If you look at some of these specialty chemical stocks, they haven't really been doing all that well. In fact, over the last 1 month, this stock, Gujarat fluorochemicals, has lost somewhere around 6% or thereabouts, and it's 1,000 odd rupees away from 52-week highs. So how should one look at this dip that we are witnessing in these stocks as a buying opportunity for the long term now?
Well, not really, because looking at the technical structure of the chart, the price has failed to sustain above its important moving averages. And I feel that it has major resistances around 3400 to 3450 levels. So overall, the technical structure of the chart does not favor taking any fresh buying positions into this stock right now.
Right, avoid taking positions in this counter right now. Let's take up a query on Tata Steel then. Himanshu Arora wants to know your thoughts on this stock. Tata Steel was up fairly 3% or thereabouts yesterday. 5 days it has gained somewhere around 6%, and 1 month chart also shows that it has really been in an uptrend. Very close to 52-week highs now. Should one look at this, or wait for another dip to come in?
Not for another dip, I would say, because the stock enjoys good support in the zone of 104 to 108. But that being said, while taking positions into metal counters, one need to keep an eye on the dollar index as well, which is a little bit resilient, and it will react once the Fed rate announcement comes in. So any spike in dollar index can have an adverse impact on the metals and the commodity stocks. But that being said, any move above 115 can lead the stock higher. Right now, expect the stock to stay in a range between 108 and 114.
Well, expect the stock to remain in that 108 to 114 level or thereabouts. Let's take up a query on Rallis India. Vijayan has written in, wants to know your thoughts. Now, this stock on a YTD basis has lost over 20% or thereabouts. But, even recently it has been in a downtrend as well, just about coming off its 52-week lows. Should one avoid this or look at, accumulating for the long term perhaps?
I think one should avoid it because of couple of things. First, it is trading near its low point, even though it is now seen defending the lows that were formed in the 187 to 190 range. But as of now, there are no signs of any even a potential bottom being put in place. And also, there are no signs of any accumulation in the stock if you look at the volume indicators. So one can look at accumulating Rallis India if it is able to cross above 195 levels. But so long as it is below 195, one should better stay away from this counter.
Right, stay away from Rallis at the current juncture. But let's take up a query on Ramco Cements. This one is coming in from Satya CK, and he wants to know the entry price for this stock. Now, if you look at this stock, it has had a stellar run on a YTD basis. It's up somewhere around 30% or thereabouts. Do you see an opportunity here right now, or do you think it's fairly expensive to enter into at this juncture?
I'll not comment upon it being fairly expensive or fairly valued, but from a technical angle, I think the bulk of the rally has already taken place, and there are high degree of possibilities that stock might enter into some consolidation, some minor retracement. So when it comes to taking a fresh position in the stock, it will not come with a good risk to reward ratio. So I think one has to let it go, let it retrace a bit, and after that one can consider taking a fresh entry into the stock. But right now, well, it is quite overextended on the chart, steeply over what I will call it, and has very high possibilities of entering into some consolidation or some minor retracement. So a fresh buying is something I will not advise at this structure.
Okay, fresh buy not warranted just yet. Let's take up a query on Ujjivan Small Finance Bank. This one is coming in from Gomti, and if you look at this stock over the last 1 month, it has jumped 30% or thereabouts. You see an opportunity to take a position here right now, or wait it out and maybe wait out for a correction or thereabouts, or are there higher highs in the offing?
I see. When the stock is at 52-week highs, or rather lifetime highs, there is an absence of any overhead resistance. So that being said, right now, Ujjivan Small Finance Bank had a breakout by moving above the 33 levels. And right now, again, as I say, it's little overextended. But if someone takes a fresh entry into the stock, a very strict stop loss of 36 rupees should be maintained, because any slippage below 36 will send the stock into some consolidation after this stupendous run that we have seen over the past couple of days.
All right, that's the call on Ujjivan Small Finance Bank. With that, I'm afraid we've run out of time on on our query segment. But Milan, before I let you go, what are your recommendations for our viewers this morning?
I'm looking at two stocks. One is the red sensitive one. So State Bank is what I'm looking at. It's trying to break out from a small consolidation. So I recommend buying SBI above 590 with a stop loss of 577 and the target of 612. Another stock I'm looking at is from the broader market. I'm looking at Paytm to buy above 728. Stop loss 702 and expected price targets of 780.
Well, SBI and Paytm, two stock picks coming in from Milan, and there has been a brokerage upgrade also coming in on Paytm. BofA in fact, Bank of America Securities has upgraded the stock to buy, and target has been raised from 780 rupees to 855 rupees or thereabouts. So looks like there is some bit of upside in store for Paytm in today's session. Well, with that, we have come to the end of this edition of Morning Trade. But a reminder for viewers, we'll be covering the RBI rate decision live from 10 a.m. onwards. So don't forget to tune in for the governor's address as well as a post-policy, analysis that we will be doing with a battery of guests. So don't forget to tune in. Thanks a lot for watching. It's a goodbye from me.